I will tell you that I would be surprised if we come out of this economic cycle and we have the money printing that I expect us to have. I would be surprised if Bitcoin does not make new highs on the other side of this. Okay, so that means that I do expect it to get to the $70,000-$100,000 range in the next couple of years. So that's number one. Number two, I do believe that we get some regulatory clarity around the cryptocurrency space, and that helps separate Bitcoin from the rest of the cryptocurrencies, and it enables institutional investors to step into the market and understand what the regulations are.
Recently, James Lavish, a well-known Bitcoin advocate and co-managing partner at the Bitcoin Opportunity Fund, provided short and long-term price forecasts for the top cryptocurrency. He, who characterizes himself as a performing hedge fund manager, spoke about the numerous significant economic and geopolitical developments that are occurring concurrently and how he anticipates they will affect Bitcoin. During a recent interview with Michelle McCary, the lead anchor and editor-in-chief at Kiko News, he predicts that the current twin liquidity drain by the U.S. Federal Reserve and Treasury Department will have an effect on Bitcoin in the near future. As part of his strong attempt to lower the 40-year high inflation, the central bank announced certain quantitative tightening measures last year. According to experts, the debt ceiling and banking crisis, both of which forced some extra liquidity back into the economy and produced a liquidity-neutral environment, have prevented the economy from feeling the full impact of the Fed's aggressive campaign. James claims that the U.S. economy is currently on the verge of a full-blown liquidity crisis as the Treasury Department works to restock the country's coffers. The Treasury Department will be draining liquidity out of the markets by issuing fresh Treasury bills while the Fed is still working to decrease its multi-trillion-dollar balance sheet. All asset values, including Bitcoin, which is more prone to volatility, will be heavily impacted by the consequent liquidity drain of over $1 trillion. He is relying, though, on the federal government's propensity to come to the market's defense at the first sign of trouble. In the event that this takes place, the renowned expert is confident that Bitcoin would easily reach new highs during the following 2 years. James also discussed the long-term future for Bitcoin with McCary throughout their conversation, outlining how and when he believes the most popular cryptocurrency would reach the $1 million mark per coin. Please take a moment to like this video, subscribe to the channel, and enable post alerts for more videos like this as we bring you excerpts from the interview.
I believe it would be a negative effect on Bitcoin, and so that's why I'm being careful and I'm slowly accumulating. I do think that it could have a sharp downturn, but I think it would be short-lived. And Bitcoin does what it does. It's a massively volatile asset, but my comfort is that it's a volatile asset that's appreciating over time. And so an asset that appreciates over time with volatility is actually a good thing. And so it allows you to find spots and to, if you're the kind of person who dollar cost averages every day or every week or every month, then you're probably going to do just fine. And however, in gold and silver, I think they could, gold, I think it could be up 50% when we have this kind of sharp drawdown, and then the Fed stepping in and easing. We get the quantitative easing again. There's a lot of paper in gold, and so there's some worry that appreciation is held up a little bit, but I still believe that gold is a great place to be, as well as Bitcoin. Number two, I do believe that we get some regulatory clarity around the cryptocurrency space, and that helps separate Bitcoin from the rest of the cryptocurrencies, and it enables institutional investors to step into the market and understand what the regulations are, and that it really is hard money. It's a commodity, and they can invest in it that way. And I do believe that will take some of the asset allocation out of their bond portfolio eventually and go into the Bitcoin portfolio. And there'll be a separate asset class on their balance sheet. And once that happens, Michelle, I believe that they're going to start establishing 1% to 3% positions in just Bitcoin. And so if you do out the math and you think about it, there's about $100 trillion of stocks, $120 trillion of bonds. There's $30 trillion of art and collectibles, about $280 trillion of real estate, and when you add up all that and gold, you get to about $700 trillion, give or take, of investment assets, right? And so if you have just a 1% position in Bitcoin, that's $7 trillion over 21 million coins. And that gets you to over $300,000 Bitcoin price. And that's just a 1% allocation. And I do believe that that eventually grows on most balance sheets to be closer to 3%. And that's why my long-term target for Bitcoin is closer to $1 million. And I do believe that we get there at some point here.
At what point? When you say long-term, what kind of time frame is that?
I'm talking the next 5 to 10 years. Yeah. So in 2033, I would fully expect that we're approaching that $1 million mark. We operate in such a deficit that we have two choices, right? Well, you've got a few choices. Let's talk through it. When you operate in a deficit, one of the main problems is that the greatest cost to this country right now is all of the mandatory expenses, right? So you've got Medicare, Medicaid, Social Security, those all add up to like $3.8 trillion annually. Then you've got your defense spending, and those are long-term contracts. We can't break those. That's about $800 billion. So now you're at $4.6 trillion. The interest on our debt is growing, because as we're paying off debt that we had from years ago that was issued at a low interest rate, now we're issuing it at a higher interest rate. Well, our interest payments are going up, and that's nearing $1 trillion this year. But let's just say it's only 800 billion, right? So now you're at $5.4 trillion. Well, the issue here is that we don't take in $5.4 trillion in tax receipts. We're going to take in less than we did last year. So we're going to take in about $2 trillion less than we need this year. So what's our option? We can either cut expenses, which Social Security, Medicare, Medicaid, who's going to cut that? That would be political suicide. So no politician will do that. That's number one. Number two, we could raise taxes, which again, that ends up hurting productivity. It's a negative effect on people's willingness to work harder and to take risks that will raise productivity, because when you tax them, it puts limits on them. In the long run, it ends up limiting your GDP, which you get to the same spot, right? And then the third thing they can do is they can just issue more bonds, right? So, and if you're a country that issues bonds in its own currency, you'll never default. So when we were talking about the default over the last number of months, we weren't worried that the U.S. was going to hard default, that they would recut the price of treasuries, that they would refuse to pay interest payments on them. We were just worried that they would trip the debt ceiling, soft default. It would be, a big battle, and then it would just put a big spotlight on the treasury market, right? So, but here's how they deal with it. They deal with it, Michelle, with just it's a long-term high inflation environment, and they initiate this through monetizing the debt, expanding the money supply. They don't want people to realize that they're doing this, but they're expanding the money supply in order to have high inflation. Why? Because if you have high inflation, that means tomorrow's dollars are worth less than today's dollars. So if you borrow at today's dollars and pay it back later at tomorrow's dollars, then you've paid back with cheaper dollars, and you're debasing your currency to deal with that great debt. And so that's what we have to do, is we have to have a high inflation for a long time in order to start paying down this debt. The BRICS nations are onto us. They know that we have control of the global reserve currency and the global reserve asset, and they're kind of tired of that. And they know that we've been playing games with our money, and they don't particularly like to hold treasuries long term and know that they're being paid back in cheaper dollars. That's not a good trade for them. So they're trying to opt out. Will they succeed? Look, the BRICS has so many problems in those nations between Brazil, Russia, India, China, South Africa. There's so many problems there that it's going to be difficult for them to get one central currency that would unseat the US dollar. Now, I do believe that the US Treasury, it's on notice, and it could be unseated as the global reserve asset. But the US dollar is so entrenched around the world that I think it stays for a while. It stays for a long time. However, the Treasury, that's where it gets interesting. And that's where people start talking about having currencies that are backed by hard assets, backed by Bitcoin, backed by gold. And we're watching the BRICS kind of dance around this and talk about how they could have a currency backed by a hard asset.
Do you concur with James and Dalio that a liquidity and debt crisis is about to hit the United States? Please leave your responses in addition to your thoughts on James' optimistic Bitcoin price forecasts. Additionally, make sure you set on post alerts for more videos like this, subscribe to the channel, and indicate that you liked the video. Thank you for watching.